Hello, my favorite traders. Today is Monday, August 15th. I hope you had a wonderful weekend. This week, I decided I'm going to do something a little different where I am launching a small account challenge where I am going to trade the Micro S&P 500 E-Mini futures for the whole week to see how well I can trade. So let's just dive right into the recap of the trades for this week. And then if you stick with me to the end, I will get to the rules for the small account challenge and my thoughts on why I created it. So we're in this trade right now and I'm up about 2 points. My thesis is that we are going to try to get back to that 42.7850 level. And at this point, I have purchased 4 micros and I'm up about 2 points. Now, right here, you can see there's a doji, which means indecision. And then this candle seems to be breaking down where it's going into a strong bear candle. I'm kind of wondering if we're going to have just a tiny pullback and then a continuation. But the volume on this candle really suggests otherwise, and I didn't catch it quick enough. So on this first trade, I was long 4 micros at 42.7375, and I just simply got stopped out at break even. So my trade thesis is still valid for me, and I jumped back in. I'm up about 0.25, and I'm just kind of waiting because I put my stop underneath at that 42.7150 level because that's where I know I'm wrong at this point with my trade if it doesn't work out. So I move my stop a little bit down, even though I really shouldn't have done that. And I'll go over my rules, what I've decided that will be allowed and what will not be allowed. So now we've kind of made a comeback where we had this almost like bearish shooting star type candle that has now been taken out by a bullish candle in a series of bullish candles. So now the trade's working out. At this point, I decide to just make a small tweak to my NinjaTrader where I want to change my buy-sell executions from blue and pink to green and red, just because I want them more consistent with my candle colors. So at this point, I'm up $1. I'm up 1 point in this trade. It looks like we're having another little pullback. And I'm not sure this trade is actually gonna work out for me at all. At this point, I should have moved my stop to break even so I could better manage this trade. But now we're going back to break even. It's fighting around this 42.75 level, which is a little bit frustrating to watch the replay of it, but it is what it is. So I move my stop a little bit further away because I don't really want to get knocked out if we test that 42.72 level and then bounce back up. So I'm just kind of watching and seeing how price is going to act at this level and if it's actually going to get a move up. So this candle is fighting for its life right now. So we're at 42.7325 and I'm about to get stopped out. I should have closed this trade out when I saw this candle breaking down back close to that prior bearish candle level. Always look left and see the action of the prior candles so you can understand kind of bar by bar what's happening as it's happening in real time, because it is sometimes a lot to manage. So far the first 2 trades I've attempted, I've gotten stopped out for break even, so those trades are scratched. And now in this trade, I should have moved it to break even. I did not. I'm kind of like hoping against hope that this trade's gonna turn around and work out. But the thing about having your stops set is that your stops free you up to think clearly when they hit, and you can reverse your decision if your thesis is now proving true in the other direction. So stops give you like a minute of clarity where you can figure out, all right, that initial thesis is not working, price is breaking down, volume's coming in, and we are not going to get back up to that 42.78.75 level I thought we were going to. So I've given this trade about 5 minutes to try to work out. I should have closed it at this point when it hit that level again and taken a slightly smaller loss than the loss I'm about to take on it. So I got in at 42.74.75, and I am now stopped out at 42.72. So I was stopped out 2.75 is where I was stopped out at. Now I see, okay, we have two double tops here, and price is now looking like it's going to take another leg down to me, because the bullish action that we kind of had like this bullish ascending wedge. Then we had price taking a leg down. Now we look like it's trying to make a move up. But at this point, I'm thinking, okay, I don't think it's going to make a leg up. I think we're actually going to reverse and go back down to the 42.68 level. So at this point, I enter a short, and I'm just kind of watching and seeing how this is going to work out. I have my stop above the level that I should have put my stop a little bit lower, like probably 42.76, to have it right where those right where the tops of those candles are, where they're kind of forming. But now the trade is working out, and the short is starting to work in my favor a little bit. I've already taken one unnecessary loss, so I am not going to repeat the mistake. We're trying to get incrementally better every single day, where I don't want to repeat my mistakes. So I am waiting for it to hit like that 1.5 R, and then I'm going to move it to break even. Right now, we seem to be trying to make a little move up, so I don't want to knock myself out of the trade if it's going to work. But then again, I don't want to take another loss. So now we've hit that 1.5 R. I've moved my stop to break even, and I'm just kind of waiting to see how price is going to break down at this level, and if it's going to get to 42.68.30. So looking at the cumulative delta, the order flow cumulative delta, you can see like the bullish action has slowed down tremendously. We went to delta neutral, and now we've flipped to the sell order flow profile, where now we're breaking down underneath that 42.71. So I'm up about 3.5 points in this trade. It's working out very nicely. So I'm just kind of watching price action to see. And I'm at this point, I'm like just checking the different levels so I can really get a good gauge on where price could possibly be headed to. So I decided to move my take profit up to that 42.68 level, because we have an area of consolidation there, and I don't want to get trapped and stuck in that area of consolidation. So right now I'm up about 5 points. I want to see if we're going to hit it. Like I say, sometimes the candles, they need to breathe. Price action is a constant tug of war, and we have to see like which side wins out. So we are kind of oscillating between 42.70 and 42.68.75. And I want to see if we can get a push down to hit my first target. And it looks like we might. And the thing that keeps me in the trade is I am also monitoring this on the 5-minute chart, even though I don't have that up here, but I'm looking at it on the 5-minute chart to give me a good idea of how price and volume are moving. So now it's moving, we're definitely breaking down. It's about to hit my target where I can have my first take profit at. And my take profit is split into 2 levels. So the first level is pretty much 2/3 of the profit that I want. And the next level is that next 1/3 that I'm looking for. So here it's kind of playing around, right? And you'll notice that as you watch price move, it likes to play around at certain levels. So this 42.70 level is a whole, it's a even number. It's almost like a psychological level, right? Like just think in tens, like 42.70, 42.80, 42.90. Those levels price will fight at to see if the bulls or the bears, which ones are going to take control at those levels. So now price looks like it's reversing up a little bit, but I'm staying steadfast. I want to see, because I'm looking at, okay, we've got this huge bearish action happening, and if we look left of the chart here, we have this consolidation level, but this consolidation starts to happen once we break down to 42.68.25. So I want to see if we are going to go back and test that again. That's why I haven't closed out this trade, because I'm just waiting to see if we're going to get back down there to that level and take it out, and then possibly go down to 42.65. So we've had a strong move up, and now we are trying to make another leg down so far, where it looks like price is like almost stalled out at 42.71, and I'm just kind of like waiting to see what's going to happen here. So now we have a strong bull candle followed by a equally strong bear candle, that both of them are taking each other out right now. And we can see that, okay, price, it looks like it's fighting, and it's going to break down under 42.69, 42.69.50, and all of a sudden price breaks down and it hits my first target. So when it hits my first target, I move my target down a little bit. Like, I don't leave it where it was, which was a little bit foolish on my part, that I should have left it, because now we've gotten to that 42.67. And you'll find when price starts moving, it moves at certain levels, right? So it's never just a straight shot down, but there's always like a pullback. There's always a slight retest. And right now it's just kind of sitting at this 42.67 level underneath my first take profit. So now I'm watching it. I want to see what happens. Now we go all the way back. So now at this point I move my stop to 42.71 because I want to protect my profit. If we do climb back up, I don't want to lose the profit that I have on the remaining 2 contracts. And now we have a huge bear bar down that takes us back down to that 42.68.25 level. And then we start to break down even further, where we get close to hitting the level that I'm targeting, but we just stop a little bit short of it. And then So we've hit pretty much, I think, 42.66 almost. Then we start to reverse back up to 42.69. And at this point, I'm going to say, all right, enough's enough. I'm going to close out that trade because I don't want to lose any more of that profit. So I've closed out the trade and I've taken my profit. And at this point, I believe I am up about $76 on all of my trades. I'm in a net profit of $76. And then I start to kind of just like watch the market break down a little bit further, and I decide to get into a short. And on this short, I am checking what's going on the 5-minute chart. So you can see, like on open, there's these blue volume bars that are underneath the candles on the 5-minute chart. You see all that strong volume that's first coming in, and as the day progresses, volume kind of just wanes down. Well, now we have this spike up, and now we have an equally strong amount of volume that's going down. So I'm just kind of watching price to see if this short that I entered at 42.68.75, if it's going to actually like work out. So the short, I really don't give it that much time to work, because I don't want it to reverse, because again, we're kind of at that weird level. This is not the best risk reward. It's about like a 1-to-1 type trade, where I'm like, all right, if it doesn't go in the direction, I'm just cutting it with no reservations. So now the trade, it's kind of reversed a tiny bit. Now it's all the way to 2.75. And this is when I should have gotten out, but I let it, it actually went down, 2.75. It went all the way to 3.25 in my favor. I should have gotten out there, but I didn't get out till we were like about 1.75. So anytime you see a doji forming, a doji means indecision. That should be a signal to you to pretty much, depending on how the doji forms, if it's getting bought up, then that should be a clear signal to you to get out of the trade to protect your profit. So at this point, I exit the trade at a 1.75 profit, and now I am looking to see if there's another opportunity for me later on to get back in to another trade. And I'm just kind of watching what the market's doing. And at this point, I am noticing that we are attempting to reverse and head back up. So I'm wondering if we are going to get back up to that 42.78 level, past that crazy consolidation that we had, because I don't really want to play in that area of consolidation. So I noticed that on the 3,000 volume chart, we're having a pullback. On the 5-minute chart, we're forming almost another doji, and I'm just watching to see what's going to happen. And as we keep moving, we start to progressively move up, where we're hitting that 42.75 level, and then we move all the way to 42.78. And at this point, I should have felt comfortable enough to say, okay, let me open up a trade targeting 42.85, but that risk reward setup wasn't that great for me, so I just didn't want to enter the trade just to be in it. So then I saw, okay, we're passing 42.80, And then I noticed here, you can see what's starting to happen is I'm looking at price action, I'm looking at cumulative delta, I'm looking at the volume coming in, and everything is really strong and really positive. We have these huge bull candles that are taking out each previous level. So at this point I enter a long at 42.87, and I get a little bit spooked by the pullback and I don't hold it. So I just exit my long for literally a 1 point profit. So that's a profit of $5 because I only did one contract just because I was not that sure of this move. Then I'm watching the chart further and I notice that, okay, we've got this nice bullish action. Then I start to see a bull flag form. And the bull flag I'll show you here on my chart. This is the 5-minute chart. And you can see here that, okay, we've gotten out of that consolidation level that I have marked in yellow. And now a good risk reward trade would have been to take the trade once it crossed over the 42.80 level, targeting 42.90. But then I just waited and watched. So I saw we had this late action bull flag forming. So to me, this is kind of like the final bull flag that would form to give us another run up if volume is strong. And then I would think that we would just kind of consolidate around here and peter out, right? So I was looking to enter again, and I actually entered at, let's see, 42.91 was my entry point, and I had my stop underneath this candle at 42.89.25. So I entered at 42.91, and my initial target was I wanted to see if we were going to hit that 4,300 whole psychological number. That was really what I wanted to do. But my patience was very low at this point. And I had been in this trade for a while, and it was taking a while for it to work out. So I entered this trade at 11.04, which is right about here. I entered 41.91 at on this candle right here. So we went up to 42.95, and then we just kind of petered out, and then we came back down to 42.90. Then we went up again, and I exited this trade at 11.45 is when I exited this trade at 42.95.25. Had I just held on for 5 minutes longer, I would have been at 42.99. And then sure enough at 12.05, so another pretty much 20 minutes, right? No, 30 minutes. We hit 4,300, and that would have been a beautiful trade had I had the patience to hold it longer. So the lessons learned today are patience, never let a green trade go red, and trade to win. Don't trade not to lose. All right, so I want to cover the rules of the Micro S&P 500 E-Mini Futures Small Account Challenge. Now again, this is just a small account challenge I have created for myself. If you would like to practice it, be my guest. But it's just for me to be able to really trade consistently and trade from a carefree state of mind. Mark Douglas, the author of Trading in the Zone, he is a phenomenal trading coach. He says in order for you to be profitable, you need to be able to trade from a carefree state of mind. And if you're worried about losing the money, you're not going to be able to trade well. And last week, that was kind of the problem that I was facing. So really my goals for trading are, I'm borrowing these goals from Al Brooks, who is a phenomenal price action trader. My first goal is to stop losing a bunch of money needlessly, right? There is no need for that. If the market's going to take my money, I'm going to have to make the market work for it. Like, I'm not just going to throw it at them and say, here you go, because trading is a zero-sum game. If you win, that means somebody else has lost. So you're competing against the best of the best. And I want to be one of the best as well. So I'm really working on being able to trade well and from a carefree state of mind. So my first aim, and these are Al Brooks' goals for trading when you start to learn how to trade. The first goal is to stop losing a bunch of money. The second goal is to start making money. The third goal is to increase your account size. The fourth goal is to learn how to start trading bigger positions. And then the fifth goal is get rich. So everybody wants to go from number 1 to number 5, but you can't get there without going through all of the other steps. So this challenge is a way for me to reset what I'm doing so I can stop falling into the cycle that I've been in of win and bust. So for this small account challenge, the rules are I am going to trade a max of 4 micros per trade. And in order to trade 4 micros, you will need $50 per contract for margin in your account. So you will need a minimum account value of $200. Then the second is I am only going to take trades that have a 2-to-1 risk to reward. So that means I will risk $50 to make $100, or I will risk $200 to make $400. But that is my aim. I am not focused on scalping just for a couple of ticks or a point. I am focused on 2-to-1 risk to reward trades. So I will be looking for my trade setup. I will be looking for my patterns. I will be looking to see where we're at with supply and demand in relation to the liquidity in the market. And then I will be structuring my trades according to that. Number 3, no trades without a stop loss. So I will never ever enter a trade without a stop loss. And my stop loss will be determined dynamically, because I can't say that I'm going to set this stop loss 8 ticks away or a point away, because if the market is moving pretty fast, like let's say the average true range of ES for 5 minutes is 3 points, I have to be able to figure out where is a good place to place my stop without needlessly getting stopped out or without creating a huge loss. So it's going to be dynamic, and it's going to be based off of the average true range movement for the time frame that I'm trading on. So I am trading based off of a 5-minute chart, and that's how I'll place my stop loss. Number 4, once a trade is at 1.5 R, move stop loss to break even. So you'll see on trades 5 through 7, I did not follow that rule, which caused me to lose about $56.25 in total. So that is a critical rule, because if you have a trade that's up, there's no reason why you should not move your stop to break even once it's past a certain point, right? Because if price is going to reverse that far beyond, then you're definitely wrong, or you can just get stopped out for break even and find another entry if your thesis is still valid and get back in. This brings us to number 5. Absolutely no green trade goes red. Okay, so that's what I did on trades 5, 6, and 7. Those trades went red, even though they were green, which they should not have done. So I'm going to work on enforcing that rule. And then number 6, no volume, no trade. If there is no volume to back up the trade, I will not be taking that trade. And again, this is just my challenge that I'm doing for fun. I implore you to create your own challenge if you're learning how to trade futures, and if you haven't been consistent, or if you're just learning, I think this would be a great way for you to learn how to grow your account without a lot of risk, because the E-Mini, the Micro E-Minis are a fantastic way for anyone to start learning how to trade futures. And again, this is not financial advice. This is just what I'm doing. But I wanted to share my journey with you, and I hope you enjoy it. So come back tomorrow and watch day number 2, and let's see how I do. So have a great day.